Good morning to the Bookmap community. Welcome one, welcome all. My name is Charles. I'm from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. This morning, I'm going to be mainly focused on the ES, which is the S&P 500 futures, although we will also mention NQ if you guys ask about it. So let's start today just by talking about both markets at the same time. So last week, both markets broke out of what we call a balance area. That is a range where the market was going sideways. When a market breaks out of balance, it does one of two things. It either takes off, creating momentum, meaning that the market had enough time to build up enough pressure to instantly start to move to a new location, or it will do what is called a breakout and back test, where it will come back to back test the highs from the range that it created. So this morning, my main focus is asking myself the question, which of those two is going to take place? In just a minute here, we will zoom out and kind of look at the market from a longer term time frame and try to give us some context. But just to start us off right off the bat, in terms of what to expect this morning, the fact that the market broke out and continued to make higher highs and higher lows. So it broke out of the range on Wednesday. It made higher highs and higher lows on Friday. It had value completely higher. And most importantly of all, it closed the day with a spike up. Okay, a spike up is a move at the very end of the day. If the market makes a move at the very end of the day to the upside, and closes inside that new range it created in that last hour, that is a very bullish sign. That is a sign that the market still has momentum and that momentum will likely continue into next week. Okay, so this morning, purely because we made the higher highs, we made the higher lows, we had value completely higher yesterday on Friday, and the fact that we had to spike up on Friday, I'm already coming into the morning this morning feeling bullish. We have all our ducks in a row. We have a breakout of balance. We have momentum. We have a confirmation at the end of the day on Friday that we still have momentum. So this morning, when the market opens, we got about 30 minutes until the market opens. The question I'll be asking myself is, do we get a continuation of that momentum? Is that momentum still going? What is the sign that I would look for this morning as a sign the momentum is still going? Opening either inside the spike, so between 56.22 and 56.26, or above it. So again, we still have a half an hour before the market opens. Anything can happen. It's too early to make a call. But as of right now, the market is making new all-time highs in the pre-market. If we open up there with a gap up from yesterday's range, that is the most bullish scenario you can possibly get in a market. Okay, so what would convince me to not be bullish this morning? Well, for one thing, if we opened below 22, I'd be less bullish, but still bullish. And if the market is able to get below the overnight low, the low that it made over the weekend is around 56.10. That to me is the very lowest level that should hold as support if the momentum is going to continue this morning. If the market gets below there, and in particular, if it gets new selling down there, I will be bearish for a pullback. Okay. And the reason I say that is because since we broke out of balance, this level here is what I have marked as my balance area high. That's just an arbitrary level that I picked based on the ranges, and we'll talk about that in a second. But since we broke out of that level, 55.70, what has the market done? It has left nothing but weakness behind on the way up. What do I mean by the fact that it's left weakness behind? Well, it has not created good lows. Every single low that it has created has left a lot of stops beneath it, waiting for the market to come back and take out those stops. So if we open this morning with a gap up or we open inside the spike, I won't care about that at all. I won't worry about the fact that we've left behind weakness because momentum, which is what the spike up tells us, is always more powerful, more potent, more important than weakness. Okay? So as long as the market is giving me signs of momentum, which today is opening above 22, there's no reason to worry about the weakness below. However, the moment the market gives me a sign that the momentum is over, which is the market getting new selling below that overnight high, well, then I'm looking for a pullback. Now, how far of a pullback do we get? I don't know. The first targets to the downside are 56.07, 56.0350. If the market pokes below those levels and it instantly turns around and heads higher, well, then that's all it needed to do. It just needed to repair that weakness nearby. Once it does, it creates the momentum and I'll be bullish from there. If not, much like the overnight low, if the market pushes below 03 and it gets new selling down there, my assumption is we need to come back for these weak references at 55.80. If it comes back for these weak references at 55.80, there is a high probability it is going to come back to 55.70. Okay? So I could easily see the market just poking down and reversing like this. But if it pokes all the way down here, it's probably going to need to test the breakout of that balance. So let's zoom out for a second. We'll take a look at the market on the monthly, weekly, and daily timeframes just to give us some context. So when we look at the market on a monthly time frame and we look at it, from the perspective of an auction process, what do we see? Well, we had balance on a monthly time frame back in here, okay? We then broke out on a monthly time frame and we're creating momentum. So right now, the market is saying it can keep going up. There's no reason in the world the market can't keep making higher highs and higher lows on the monthly. Okay. At some point, it's going to want to come back to test this breakout of balance on the monthly time frame, but there's no reason to assume that has to happen anytime soon. This momentum can continue for a very long time. The last time we had momentum on the monthly time frame, it lasted for 5 months. Okay. And you can see when we previously made all-time highs, that momentum can last for a year easily. So there's no reason in the world the momentum has to come to an end on the monthly basis. Let's take a look at the weekly. Okay, looking at the weekly, we can start to see the balance that we had just below us, right there on the weekly basis. And once again, what are we seeing when we look at the way the market is creating momentum on the weekly? It could go quite a ways up from here. The last time it broke out of balance, it had momentum for 2 weeks straight to the upside. So there's no reason that the momentum can't continue on the weekly as well. Both of those are bullish to see. They don't mean the market has to go up. They just mean there's no reason in the world that it has to go down. Okay, so then we're going to take a look at the daily time frame. Now we can very clearly see that balance that we were stuck in for, the better part of a week and a half, going sideways. That was the market building up steam, building up momentum, right? As I discussed, there's 2 ways the market will break out of a balance area like this. It will either break out and just go to a new location. Okay, that's what you could see happen down here. The market broke out and it just went to a new location and it never came back for that balance area again. That is one possibility. The other possibility that can happen is the market can break out of balance, come back to back test it, find support, and continue higher from there. Or, of course, it can fail and pull back down. But we don't need to worry about that right now because so far we've had signs of momentum. The market went sideways inside the range as long as it needed to, and it broke higher. The idea is if it wanted to come back for those lows, if it wanted to come back for the 5,500 area, it should have done it in here. So now it doesn't need to. So for now, we're focused on momentum. And that means one of 2 scenarios will play out over the next few days. Either the back test, looking for support, or the continuation of the momentum to the upside. Okay? Now, people will say to me, they will say, Charles, how far can they push it? So when you're at all-time highs and you're in blue skies and there's no clear resistance level above, it is hard to know where the top of the market will be, where the market will run out of steam. One way is to just look at the size of the previous balance area and assume it can easily do that much of a range. Okay? We've pretty much already done that. So it would make sense for the market to run out of steam here and pull back down to backtest that balance area high. So those are the two scenarios I see as likely this morning, either continuation of the momentum up or a pullback down to 55.70. What I'll be using as my first most important indicator to figure out which of those two is happening is the overnight low at 56.10. If the overnight range holds, I'll be as bullish as I can be all day long. If it breaks, I'll be looking for the market to pull back, and the question will be, how far does it need to pull back? Does it just need to pull back to 5,600, or does it need to come all the way to 55.70? Okay. Let's jump over and take a look at the NQ. It's basically in exactly the same scenario, right? You got balance, you got a breakout of balance, and a continuation of that momentum. So the story is basically exactly the same on the NQ as it is on the ES. The NQ did not have a spike up at the end of the day, so that is slightly less bullish, but it also pulled its fairest price to do business up, which is bullish to see. So both markets are opening this morning with a confirmation of momentum at the end of the day on Friday and the potential to continue that momentum this morning. As far as the NQ is concerned, I would also use that overnight low as a level, as sort of a deal or no deal place for the market to continue that momentum this morning. If they can stay above 25.83, they can keep the momentum going. And it will shock you how far they can push it when they have the momentum. But if they pull back down below that overnight low, I'll be looking for a larger pullback. It looks like the NQ has a gap that needs to be filled below. That might be the target. Okay. Actually, I take that back. That is not a gap. So yeah, I would say first target to the downside for the NQ on a pullback is going to be these single prints at 25.75, then 25.60. Okay. That's the first place where it could dip down, backfill those single prints. I'll zoom in to show them to you. The single print right here and the single print right here. And then it just immediately gets support and turns around and heads higher, or we pull back down towards 24.20. Far out, bro. 24.20. So now we got 15 minutes till the market opens, and that's about all the analysis that I have for today. It's really that simple to me. Highest probability, continuation up. If it's going to be a pullback, we'll see it when it breaks the overnight lows. We got 77 people hanging out this morning. Let me refresh the page to see how many of you have pushed the like. 10 people? 10 of 77? Come on, guys. Let's smash that thumbs up button. Let's tell Bookmap that we want them to keep creating content like this. Let's tell YouTube to send some other traders this way. Maybe they'll share some insights in the chat that we might all benefit from. Speaking of the chat, pop in and say hello. Let us know what your thoughts are for the day. Will is here. Good morning to you. Jay in the house. Another day in paradise. Debbie B is here. DNK says new all-time highs for ES and NQ again today. Yes, sir. And remember, all-time highs that are made in the overnight market are considered weak highs. Almost always. At some point, the regular trading hours, I should say almost every single time ever in the history of the world that an all-time high has been made in the overnight range, the regular trading hours have come back for it. Not necessarily the next day, but we always come back. So that increases the odds that we will at least test those overnight highs today. Trevor, good morning to you. Alois, good morning. Welcome. Benjamin. He says, hello from France. Au revoir. I don't know any French. I'm sorry. Ha ha ha. Welcome. Malang is here. Khan, hello to you. Michael in the house. Michelle and Jeff. Good morning from Wisconsin. Good morning from Wisconsin. Chris is here. He says, let's go. I assume you mean the market and a continuation of the momentum. I'm with you, Chris. Let's go. Chris says, what's up with trailing liquidity lately? I noticed it starting last week. Yeah, there have been, Bookmap has looked weird. My assumption last week was that it was purely because of the holiday. You know what I mean? So market makers, they don't want to have to sit in front of the computer, when they have a chance to take a 4-day weekend. So they kind of just write algorithms to keep the market bracketed in a certain range. And that liquidity that you're seeing is just, either if you're looking at it as generally low liquidity, that's a lack of larger participants in the market. And if you're seeing weird things in terms of bracketing, that is also just, market makers basically taking the week off. But this right here, this specific behavior that we're seeing in the ES on Bookmap, this is not normal. This is always here on NQ. Okay. NQ forever and always has that sort of bracketing on it. Can't really see it here, but you can see that where there's just like orders sitting, a certain number of points above and below the market, no matter where it goes up and down. That is very normal for the NQ. We see that all the time, but it is not normal to see for the ES. Because the ES has so many different products connected to it. You got the 500 companies that are underlying the S&P 500 and the changes that are happening with those companies. That's creating arbitrage. You got the SPX and the changes that are happening with that based on options that are being bought and sold. That has arbitrage. And then you have, arbitrage between NQ and ES and all of it. So normally you don't see these huge nodes of liquidity directly above and below price on the ES. Generally, you see it kind of more spread out, more evenly spread out. So that is something unusual that I noted last week. There's nothing I really took away from it in terms of trade execution other than, and again, we'd have to wait for this to play out today for me to be able to show you examples. But it does seem like, let me just see if I can zoom back over to last week. Show this. So you have sort of just larger nodes of liquidity that are sitting above price, right? First, as price moves up to it, those brackets will start to push into that, right? Sometimes that acts as support or resistance. So if the brackets are able to poke through, you were getting follow through with price, able to poke through. But other than that, I really don't see any edge with it. It is important to note that things change every day in the market. Right now, somewhere in the world, there's a quant inventing some new algorithm that's going to do some new thing, and tomorrow the market will look totally different because they'll be putting it to work. So we just have to be observing these changes as they happen and, analyzing what information we can glean. Khan's coming at us from Greece. That's dope. Truman in the house. Truman says 1 TPO below week low is a repair of that weakness? Question mark. It is not. 2 TPOs. So anytime we're looking for what we call excess, which is a potential end of an auction, we want to see at least 2 TPOs below a previous low. So for example, we have more than 2 TPOs above yesterday's high, above Friday's high. So that's fine. That's a good high down there. But the overnight low reversed at the exact same level 4 times. Created a low in the E period, reversed again in the K, the S, the T, and the U. So this is a very weak low right here at the overnight low. So why do we care if there's a weak low down there? Well, it just means anyone who went long anywhere in the overnight range, anyone who went long at all this weekend, likely has stops right below that low. That's just how both human behavior and algorithms tend to do it. They put their stops below whatever is the current low. So if the market were to start to come back down, that's a target to take profits, right? If you're shorting, you want to take profits at that low because you know there's a pretty good chance it's going to come back there and repair it. Now, let's say it pokes a whole point below that low. It gets 2 letters, 2 TPOs below there. Well, that might be all it needs to take out those stops. And so it might turn around and reverse and come right back up there. If not, you do the same thing at the next week low, which was the F and G lows from Friday. If not there, you look at the next week low and so on and so forth. Remember that when the market is going up, they're convincing more and more and more traders to chase price, right? More and more traders to feel like if I don't get in now, I'm going to miss my chance and the market's going to run away without me. But on the way down, right? So they go up, bringing people in. On the way down, they're just dipping to a magical level where traders will think the market is on sale and it's cheap and they'll buy it at that low. Oftentimes that is a weak reference. So oftentimes the traders that couldn't get in over the weekend, they'll be waiting to buy down here. Or the traders that couldn't get in on Friday will be waiting here. Or the traders that couldn't get in on Wednesday will be waiting down here. And so the question becomes, if you run out of momentum and you start to pull back, how far do you need to dip to bring in those buyers? As of now, that is not our concern because we still have momentum. But as soon as that momentum runs out, that's what we'll be looking at and thinking about it. Good morning to Sid and Shk230. Klaub. Hello, bro. Good morning to you. Jen is here. It says it's a beautiful day. Thank you very much. Appreciate you. SC in the house. SC, this kind of normally happens during a contract rollover. He's talking about the bracketing. That is true as well. You tend to see thinner liquidity and sort of weirder stuff like this during a contract rollover. That is what it looks like. It almost looks like this is the week of the contract rollover. Thank you, Chris. Nap in the house. Good morning to you. Truman is here. Truman says all the time frame balance breakouts need to be retested eventually, monthly, weekly, daily breakouts. Yeah, I don't like the term need to, right? Because it's all a matter of, the market is a giant auction process. If people are willing to pay a higher price, then the market doesn't need to go down to bring in those buyers. So I would say on the daily, yeah, you almost always come back to backtest those breakouts sooner or later, but not necessarily always, and definitely not necessarily right away. Okay, so just zooming out here a little bit. We're on the ES, we're on the daily. Okay. Here's a balance area that we broke out of, never came back for it. Here's a balance area we broke out of, started to come back, but didn't even have to make it all the way back. They barely put that market on sale and it brought in new buyers. Okay. Here's another one, a breakout that we never came back for. So has to is kind of forcing it, but just once you see the market break out, there is a high probability you'll come back for it eventually. So on the way up, the previous time we had a bull market back in the, way back in the 2020, 2021 eras, you could see there were a lot of times where we had balance, broke out, didn't come back to back test it. Well, whenever we got to a bear market, guess what the market did? A year later, came back to back test those levels. So it's like, yeah, eventually you come back for it, but it doesn't necessarily mean you have to do it now. And so I wouldn't worry about it like that. My question whenever I see the market break out is, do we still have momentum? As long as I'm still seeing signs of momentum, I don't worry about a pullback. But then as soon as we run out of momentum, then I worry. But if we were to look at like the monthly basis, there will be lots of times where we probably never came back for it. So here you can see a balance area on the monthly time frame, broke out, came back, back tested twice actually before continuation. Balance area right here, broke out, came back, back tested. Balance area here, broke out, 2 years later, came back, back tested. So if you are a day trader, you're not worried about that. It'll take years to come back for it. Two minutes to market open. We are opening with a gap up. If the bell were to ring right now, that is a sign of momentum. So if we open with a gap up, the first order of business for the market will be to try to fill the gap. We define filling the gap as getting to Friday's high. If the market gets to Friday's high and it finds support there and it bounces, that is the most bullish scenario. That is a gap and go. If it pulls back down into the spike, so if it pulls below 26, that is still not bearish to me. It's less bullish. The bounce on yesterday's high would be the most bullish, but it is still not bearish, as I could see us finding support at 56.22. So any buying above 56.22 this morning is bullish for continuation to the upside. Now, if we start to pull back down below 22, well, then maybe we need to come back for the overnight low, and we'll see what happens. But it's a bull market, you know. And all you need in a bull market is momentum. That is what the gap up is telling us. Spike up, gap up. We have momentum. There you go. Market is open. We did open with a gap up. So the first order of business for the market is to try to get back to 56.26, and we will look for buyers there. Obviously not necessarily a bounce to a tick exactly on the high, but just getting to there and then turning around and heading higher. We got 105 people hanging out. Welcome one, welcome all. Please hit that thumbs up button. I sure would appreciate it. It will make me feel good, feel the warm and fuzzies on the inside. It will also help out Bookmap, send some new traders their way, which will tell them to keep creating the content like this for you. Geo Cap says, what is the importance of the prior close? So there are certain levels where the auction can change, right? The previous day's high, the previous day's low, the overnight high, the overnight low. Another one of those levels is where the market opens and where the market closes. So today, that level happens to also be the base of the spike up. So again, bullish above and less bullish if we pull below. Just imagine it's a level where people change their mind. People that are willing to buy right now, that are willing to pay all-time high prices, they won't be willing to pay if the market dips below the previous day's low. They'll need it to go on sale a bit more before they're willing to buy. Zahir, welcome. Says, can we look at the NQ? Yeah, let's jump over to the Q real quick. Okay, so the NQ did not open with a gap up. That is less bullish to see. However, they did make another week high, and I still see it as momentum. So not quite as much momentum as the ES, but it is bullish. Now that we are poking above the previous day's high, we're about to make new all-time highs on the Q. The question will be, can they turn that into support? So if they can poke above 26.43, come back down and turn it into support, that will be bullish for continuation. If they pull back through the opening price, it'll mean we need to go sideways for a bit inside the overnight range. So both markets looking bullish this morning, but they need to confirm it. Right now, this is a gap and go, but I still think they need to pull back down on the ES and test yesterday's high. Test 56.26. Now, if they're able to turn either the halfback at 56.31 or the overnight high at 30, if they're able to turn those into support, well, then I'm wrong, and we'll just continue higher without the gap fill, but I still think they'll want to try to fill the gap. The market is getting itself a little overly long, a little fast here. Chris says, can you explain a liquidation pressure gauge? A liquidation pressure gauge. So we talked about the way buyers buy the market, right? They call it the stairs up. And the reason that it happens is the market was here and there were people that didn't own it. Whether we're talking about an individual stock or we're talking about the futures, or we're talking about an, ETF or whatever it may be, right? Any financial asset. The price was down here. This is what it cost. And then it moved up to here. And there are people that wished they would have bought it here, right? So as it starts to come down, they start buying. They're like, ooh, look, it's getting cheaper. I want it and it's cheaper. So they buy it. Well, that causes it to go up again. So then there are more traders who didn't buy it here and they didn't buy it here. So as soon as it starts to come down, they buy it. and so on and so forth. And that's the stairs up, right? And as long as you keep convincing new traders to buy it over and over again, the price just keeps going up. That's what we call momentum, okay? But let's say the market does that. It takes the stairs up, and it gets to a new higher level, and then it starts to turn around and come down. Well, all the traders, no matter what dip they bought, all those traders lose money every tick the price comes down, right? Because it doesn't matter whether you bought the very first dip or you bought the 5th dip. As price comes down, your profits are going down. So on the way up, they have to convince more and more and more traders to get in. But on the way down, everyone wants out at the same moment. Everybody wants to try to get out before the pullback. So you end up liquidating the price. The price drops down. So they call that the stairs up and the elevator down. Okay? That move down, that swift move down, that is what we call liquidation. So we can tell if a market is liquidating based on the tempo that it moves and the size of the range. If candles are this big, and then all of a sudden you get a big candle that happens very, very quickly, that's a liquidation, right? And we want to recognize when that's happening. Because if the market liquidates, guess what it's likely to do next? Turn around and head right back up. Because it only needs to liquidate to whatever that magical level is where those new discount shoppers will be waiting to buy. So just using this morning as a context, if the market passes back through the opening price right now, it is likely to liquidate down to the previous day's high. Because everyone that's been buying this morning, almost everyone, except for in the first minute of the day, almost everyone has been buying above the opening price. So that means almost every long in the market is going to want to get out of their long if the market dips below that open. So you get a very quick move. Well, then anyone who hasn't been willing to buy up here, anybody that feels like they're chasing price, guess where they're going to start getting in? Either at the previous day's high or at the base of the spike up. That's why I have these levels marked as potential support. And these liquidations happen on every time frame. It can be happening minute by minute. It can also happen over a period of weeks. Okay, so now we are pulling back down. We did not find support at the halfback, so that increases the odds we're going to test the overnight high at 56.30. If they can hold the overnight high at 56.30, I will be bullish for continuation to the upside. However, in my mind, the higher probability is a liquidation back to the previous day's high, to Friday's high. Let's see what happens. Can they hold it? Knapp says multiple distributions on the overnight question mark. No, that's just Fridays, you know, the last like whatever hour of the day, the way I split out my profiles, but just think about that as one big overnight range. That's just a technical thing. Suk, good morning to you. Danae, good morning to you. Percy in the house. RK says it sounds like a blow off top. I don't know what I was talking about when you said that. But that is essentially what will be the first thing to trigger the market to pull back. Alois says, liquidation pressure. Chris means the market pulse algo. Yeah, I don't know what happened to my market pulse. That's a good question. Oh, I got to change. I got to update the, that's what it is. So if you're asking what is the market pulse basically showing us, the way that I have my settings set up here, what I am measuring is the volume pressure imbalance. So essentially, is the volume in the market more buyers or more sellers? Okay. So when you see this little, thing going to the green side, that is more buyers, more people going long the market. When you see it going to the red side, that is more people going short the market. And this is like, second by second throughout the day. If you start to see those numbers get extreme, so if you start to get to like, negative 90 or positive 90, that is likely a higher low. That is likely where the market is getting itself so long at a positive 90, it's going to need to pull back, or so short at a negative 90, it's going to need to pull back up. Okay. So this is just really great if you're more of like a scalper, or you're just, for me, the way I use it is I just listen for that clicking noise when it gets above about 95%. It makes a little clicking noise, and that tells me to ask myself the question, can the market turn this particular level, wherever it is at that moment, into support or resistance to carry forward? I would not try to trade based purely off of that. It's just one indicator to add. Okay, so I would describe myself as cautiously bullish at this moment. The market is turning the previous day's high, the overnight high into support. It is trying to continue higher, but on the Bookmap, what do we see? Icebergs at the lows and the highs. So that tells us that this is machines creating chop here. Why would they do that? Why would they get the market to the overnight high and then keep it there over and over and over again to try to convince people to chase price, to try to convince longs that the market is going to continue higher, and then they liquidate them? So it does look like the market has momentum, and that absolutely means it could keep going higher, but I don't really trust it just yet. To really make me feel good, I'd have to see the market make another move up, and I'd have to see the NQ get above the previous day's high. If the NQ can get above 2643, it'll make me much more confident. Right now, this feels like bot shenanigans to me. They're trying to fool us into longing the high so they can pull it back. They can pull that rug out from underneath us. While we watch the market chop here in the bot shenanigans, it's a great moment to hit that thumbs up button. We've only got 60 likes so far. That's only half of you, which means half of you hate me. What did I ever do to you, half that hates me? Let's smash that thumbs up. Okay, still feels like bot shenanigans to me. Like I said, I won't trust the move on the ES till the NQ can break its high. Why is the NQ's high so important? Can anyone tell me? Tell me in the chat, what do you think it is? Why is the high important on the Q? Hello? Frito says, look above and fail. That's not the answer I'm looking for. Anyone else? Why is, if I'm a bot and I don't want the market to run away to the upside today, why would I want to protect that high for NQ yesterday? Stops. Nikos got it. Exactly. So the overnight reversed exactly at the previous day's high. This morning's market reversed exactly at the overnight high. So there is a lot of stops up there waiting to be taken out. That's what we call shorts covering. Okay? So if they let the NQ get above that high, it could really start to create some momentum with those shorts covering. So if I'm just trying to fool people into going long at the highs so I can pull it back, I do not want to let that short covering start, because that could convince new buyers. That could start FOMO. People start chasing. So to trust this move to the upside, I got to see them break that high. And then see what the results are of that short covering. Tom says, anyone know if there's a way to remove the live stream delay? This is about 30 seconds behind. Generally, it's not that big of a gap. It's usually only a few seconds. Okay, so here's that moment for short covering. Boop, boop, boop on the NQ. Nothing. Only took out 170 stops there. Shit's weekend, Q. Frito says, best I can do today, 10-second delay. Tomaz says, where did you see on Bookmap the number of stops? I have a plugin called the Stops and Icebergs plugin on the queue. And it just fills in. So if one account gets stopped out for a certain number of orders, it shows me those. The way I have my settings set up, it only does it for large orders. So there was someone that got taken out for 105 at 26.27, and then someone else for 174 at 26.45. And that's not very much, which is why we didn't really get much short covering, because there was just one guy with the stops up there. Tomaz said, do you know the server name? It looks like he found it, but if anybody's curious, you can join the Discord. There's a link in the description. Man, I am so confused right now. So the market is giving us clear signals it has momentum. Spike up at the end of the day yesterday. Gap up this morning. Thus far, a gap and go. But the one thing, the two things that have me feeling like this isn't a gap and go, The one is the tempo. It's very slow tempo for a gap and go. And the other one is the taper at the high. The fact that each time the market tries to push up, there are fewer and fewer buyers. You can see we have less volume the higher that the price goes. That is making me feel like this isn't really a gap and go. So I would say if we get another test of the halfback at 56.33 and it holds, I can be fully bullish. But as of now, I still just don't trust it. My instincts, my spidey senses are telling me they need another dip. They want to try to fill that gap before they make the move. Nick says, is there a way to fix the access for each indicator line on the subchart to a particular range? Only if you have individual, only if you have like one thing on there. If you have multiple things on there, they're going to overlap each other. You can also have multiple different subcharts too, if you'd rather do that, and have each one on its own chart. Truman says, why would bots make a double top? Well, bots have to use exact references to enter trades. So remember, they're built on mathematical equations. So if you have to tell a computer what to do, for example, computer, we want you to keep the market in a range. Where is it going to start to layer in orders to stop it from breaking out of that range? Probably at a previous high or low, whether that's a previous TPO or a previous day's high or low or whatever it may be. The computer has to have exact levels to look at to do things. So it creates a lot of weak references. For example, I have no doubt in my mind this was a computer at the overnight low. That wasn't humans. You're telling me there's not one single person that was willing to pay less than that level? Absolutely not. That was a computer reversing the market again and again there. Okay, so now we're back to test the halfback. It has previously been acting as support, okay? Which means most of the buyers this morning are buying above here. If it holds now, I will truly be bullish. If not, we're likely to get a pullback to yesterday's high. Let's see what happens. So this is where we're now asking, are there new buyers up here? If there are new buyers, the market can just keep going higher. If not, you'll squeeze the current buyers and the market will pull back. Can they hold it? Somebody's pushing a little heart thing. Thank you for the hearts. I love you too. All right, so unfortunately, I must call this stream to an end. It is time for me to head off and hang out with the cool kids in the Piratetraders Brigade private stream. If you're not a member of the brigade, you might consider joining. I hang out like this every morning and give my insights on what I think is happening that day in the market. It only costs $10 a month. As far as I'm concerned, that is a completely risk-free price because $10 is less than a single tick on the ES with just one contract. So if in an entire month of giving my advice, I don't give you a single tick worth of advice, well, that's just crazy. So I would suggest you sign up, you come, you hang out, and you find out, what I think every day. Give yourself some insights. If you're not a member of the brigade, head on over to Bruce's stream and you can watch him there. As far as what I think for the day today, this is where I'm at. Okay. I am bullish, bigger picture, thinking the market wants to continue the momentum up. I do still think we need to fill the gap. I do still think we want to get to yesterday's high. The tempo is very slow. Okay. That reminds me more of what we call a gap and chop than a gap and go. And the taper at the high on the ES tells me we have less business the higher we go, which means we need a pullback to bring in new business. Okay. And the NQ is just choppy as can be. All right. They're still inside the previous day's range and they just created a poor low. So all of that tells me the market bigger picture wants to go up today, but it probably just needs one more dip, one little vicious little pullback to wipe out everyone who's chasing price right now. And then it turns around and heads higher. Okay. So I would describe myself as willing to long the market as long as it stays above the opening price, above 56.29. If it keeps bouncing and bouncing and bouncing up here, then I would be willing to trust the momentum. But I can't explain it, guys. It's just a feeling. To me, it just feels like it needs a dip. It needs to just poke into yesterday's range. Then we get that momentum. Okay. So I am cautiously bullish right now. All bets are off if the market gets below 56.20. Okay. So it can dip down into yesterday's range, find support, and I'm just as bullish as I can be. But if we dip down below 20, it likely needs a pullback at the very least to 56.10 and maybe even as far as 56.03. Okay. So we got to keep the momentum going if we're going to keep price moving higher. With that, I will say good luck. Happy trading. If you're not a member of the brigade, I will see you here next Monday. If you are a member of the brigade, give me about 5 minutes and I'll see you in the private stream. Thank you very much, guys. Bye.